Good morning. Nice to be here at a conference after all the 2 years of COVID. I was speaking earlier and saying that I recently traveled to New York and Boston and Toronto. I'm a Canadian, and it was excellent to see these cities reopened again. And it's wonderful to be with you all here now in person. As I mentioned, I'm a Canadian. I did my graduate degree here in London many years ago. I've been in London now 25 years. And I have been teaching now on the graduate degree program at London Business School for the past 18 years. And I teach a segment on asset management in general, but the last 3 to 4 years, I've been teaching a segment on the impact of climate change for the investment management industry. My professional background, I have been working in the industry for many years. I eventually set up my own asset management business that grew quite successfully, and I was very, very fortunate to sell the company to a Swiss public company. After that period, I took some time out, and then I became deeply involved in really trying to answer two questions. Climate change always, I was curious about it. I was somewhat skeptical about it. I see myself as a very evidence-based person, so I began to read scientific, peer-reviewed papers to answer two questions. One, is it really that bad? Because it doesn't seem too bad when I look at the climate. And number two, is the change caused by humans? Because the climate has always changed, even before human beings were on the... These were my two primary questions. After reading about 50 academic papers, I was convinced, number one, it's very bad, and number two, it is definitely caused by human activity. I decided to get involved and do something. I didn't know what to do, so I enrolled at the London School of Economics. They have a very high-level program on climate change, and that led me to some research that I will share with you today. What we're going to talk is briefly the science of climate change, just to hopefully give you an update on that, the Paris Agreement and climate risks. And then I want to move to one particular solution for climate change, which is carbon pricing and emission trading systems. I'm very excited about what's happening in this area. I'll tell you then about our own proprietary research into carbon as a liquid and investable asset, which we think it's a new asset class that's coming to the market now. And we manage a climate change impact fund called the World Carbon Fund. So just at the end, I'll of course tell you a little bit about that. So let's quickly go over where we're at. The development of fossil fuels, mainly coal, oil, and gas, has been responsible for lifting at least 2 billion people out of poverty. So let's be clear, fossil fuels have been, on balance, a good thing in terms of moving GDP and growth around the world. However, the emissions have been building, and that externality is now triggering real economic impact. We emit about 150 million tons every day, about 40 billion tons every year. And I'm always amazed, because I do a lot of public speaking and I go to a lot of events. You cannot turn on the TV or the news today without hearing about all the advances we're making on green and sustainability and climate. But this year, we will emit 40 billion tons. And next year, we'll emit 39 billion tons. There's lots of talk, but the emissions continue. And the largest source is coal, gas, and oil. Burning these fossil fuels emits carbon dioxide. This is a geometric, exponential curve. The only curve that approximates this, of course, is human population growth. We have gone from 1 billion in around 1900. Today we're at 7.8 billion. And we are going to 10 billion people by 2050, and each individual will have some kind of carbon footprint. Charles David Keeling began to measure the concentration of carbon dioxide in the atmosphere in the late 1950s. And you can see here, it has followed the curve upward. And that curve continues. Only last week, we hit a new record of around 415 parts per million of concentration. And we understand the properties of carbon dioxide. It traps heat. So as the concentration increases in the atmosphere, it simply is like a duvet, a blanket around the planet, and it just simply increases heat. Indeed, we're seeing a significant departure in temperatures from average levels. And that is in no small part because of that. In fact, 19 of the 20 hottest years have been since 2002, and the last 7 years have been the hottest years on record. When we talk about investment management, we talk about risk. Risk doesn't lie in the mean of the distribution. Risk is in the tails. The extreme events is where the risk lies. And I think this is very important. If we take the average temperature in the Northern Hemisphere as a baseline from 1951 to 1980, and we have hotter than normal days, and then colder than normal days. Now we move one decade. We move 10 years. From 51 to 80, we move to 1990 to 2000, and we see this shift in the distribution. But while the mean has shifted to here, this is not the concern. The concern lies in the tail of the distribution, the very, very hot days. If we move to 2010 to 2020, now we see that 22% are now the extreme days. We recently had new record temperatures in the United States, in Pakistan, in India. This impacts drought, crop yields, significant reduction in crop yields, and of course, human migration. 364 all-time records. Most of these were broken in 2020 and 2021. Most of these records have been broken. And certainly the insurance industry, when we talk about the impact of this is a very real economic number. We're talking hundreds of billions or perhaps trillions of dollars of impact. So releasing CO2 is not only a moral and ethical issue, put that to one side if you can, it's an economic issue. It's dollars and cents. And I think that's very important to understand. So where are we? The scientists have told us we have already warmed the planet by about 1.2 degrees on average from pre-industrial times. The science is clear. The scientists have said we must keep the level of temperature rise to 1.5 or at the most 2 degrees. And there's very important reasons for these thresholds. In 2015, you can imagine how difficult to get a consensus around this topic. I think we studied this intensely at the LSE. To get over 200 countries to agree to anything is a huge achievement. So that was a triumph. But when we look at what we need to do to address this issue, the challenge becomes very clear. The blue line is the largest supertanker in the world. Make no mistake. Everything we do and touch has some kind of carbon footprint. And yet, these are the pathways that we need to be on to achieve 1.5 or 2. That is a dramatic shift. That is dramatic in terms of what we need to do as a society to be on that pathway. And the current pathway we're on is 2.5 to 3 degrees. And I can tell you, having read now more than 200 academic papers and 33 books and been deeply embedded in the science, 2.5 to 3 degrees is a world you do not want your children to grow up in. I have already accepted the fact we have locked in so much warming that when my children have children and they go outside in the summer in the northern hemisphere, it is not going to be like when I went outside as a child. I've already accepted that, but we really need to move on this issue. At LSE, we studied all of the mechanisms that governments have tried to get emissions down. How can we stimulate? How can we encourage people to reduce emissions? Out of all of these policies, one stands out, and that is when we put a price on emitting. When you put a price on emissions, business and government are very innovative. How do I get around that price? How can I avoid paying a price? We live in a market-based economy. Even China is broadly a market-based economy, and therefore a market-based solution has real impact. And that is what the research shows. Jim Yong Kim, former president of the World Bank, says carbon must be priced to stimulate faster reductions. And I'm very pleased to tell you we're seeing real growth in carbon pricing initiatives. The big development, these are the number of initiatives, so we can put a tax on carbon, or we can have an emission trading system like we have in Europe, like we have in the UK. Last year, the yellow bar, China, the biggest emitter in the world, launched the biggest carbon market in the world. This is very, very good news, but we need more. Only about 24% of emissions are covered by some kind of price. So we need more action, but the direction is very positive. And one of my objectives today in speaking to you is really to provide education on how a carbon market actually works. It took me about 2 weeks to study this carbon market mechanism. And I want to try and run it through with you today to hopefully leave you with an understanding of this mechanism. So an emissions trading system, like we have in the UK, Europe, in California, in New Zealand, and in China, how do these markets work? The first thing is, what is the objective of a carbon market? It has two objectives. The first is to cap emissions and lower them. The second objective is to achieve this at the lowest cost to society. That's very important, that second objective, when we have such a big job to do to decarbonize. This is how it works. Any factory or business that has big emissions above a threshold, that company is notified by the government that they are included in the program. It's mandatory. It means that they are audited every year, and if you emit 1 million tons of carbon, then in April next year, you must give the government 1 million carbon permits. The permits are allocated and sold at auctions. So the government sells the permits at auctions. But here's where the first objective comes in. The total supply of permits is capped, and every year the supply comes down. So we achieve our first objective, that emissions within, if you guys are one country, when I lower the supply of permits, someone in the ecosystem must lower their emissions. The question is who? Who will lower their emissions? And this is the beauty of an emission trading system. The supply is capped and it reduces every year, ensuring the environmental targets are met. And then the companies can buy and sell the carbon between them. So the government controls the supply of emissions, but the market, the free market, determines the price of emissions. And that price signal is very powerful. That price signal is taken by each participant and internalized by that company. What do I mean? I mean the CEO of Heidelberg Cement in Germany, they emit 11 million tons of carbon per year. The current price in Europe is about $100. That's $1 billion a year cost. Do you think the engineering team is focused on how to get emissions down? Damn right they are. $1 billion a year? The CEO is all over it, the board. So the internalization, when the carbon price is internalized, each company asks the engineering team to say, at what price do we decarbonize? Do we get rid of the old machines and we bring in the new clean machines? It costs money. Tell me the price. And this is the beauty of the price signal. So if we think about the global economy, here we have the price of carbon per ton. The price of carbon dioxide, $50 a ton. Now in Europe, we're about $100 a ton. And every bar is a different industry. So steel company, a cement company, a refinery. And each company calculates the cost. At what cost can we decarbonize? For some companies, very, very expensive to decarbonize. But for some companies, they do the calculations, it's very cheap, $10, $20. So when the price is $50, if I can convert my factory and my cost is $10 a ton, what do? I convert. I cut my emissions. Do I do that because I'm green? No. Do I do it because I have moral and ethical? No. I cut my emissions and I make the choice because I make more money. It is a profit-driven, market-based incentive. That is the power of the mechanism, because that's what we're all here for. Business, profitability, that drives. So what the carbon market does is it cuts through everything and we pick the lowest hanging fruit in the economy. When we lower the supply of permits, as long as we have liquidity in the market, we can be very confident that these companies are those that choose, and therefore we achieve our second objective. We've lowered emissions, but we did it at the lowest cost to society, and that is very important. Another very interesting aspect is this carbon market, and now we trade in Europe globally we're trading $3 to $5 billion every day in carbon. So this is really growing. And that market allows investors and steel companies, cement companies to hedge a multi-year decarbonization trajectory. Again, very, very important. The revenues, when the government sells the permits, that revenue, now that's hundreds of billions that comes into the government, that is segregated, and the government reinvests the revenue in energy efficiency and low carbon initiatives. So when you step back from this policy as a policy tool, you realize it has multiple benefits to addressing climate change. One of the biggest, though, is the proof in the pudding. In Europe, since the carbon market was launched, emissions in Europe are down 1 billion tons per year. Global emissions, how big are global emissions? 40 gigatons. Reducing by 1 billion, that's moving the needle. That success in Europe is now why China has chosen to launch a carbon market. Many countries have made COP26 pledges to hit net zero, but they don't have an idea really, how will we reach net zero? They can look at Europe, they can look at California, and now they can look at China as examples of, here is a mechanism that you can launch to hit net zero efficiently. And I'm very pleased, Indonesia launching a carbon market, Vietnam, Malaysia, the Philippines, Mexico is running the second year of their pilot carbon market. They will go live in January. And there's another 10, 12 countries around the world looking at launching a carbon market. This is good news, because to cap and lower emissions, we know we need to be on that trajectory. When I learned about this mechanism, there were two immediate thoughts. The first was, finally, I think I found a policy tool that has teeth, that can address climate change. And it can do it at scale in the time we have remaining. What is the time that we have remaining? At our current run rate of emissions, 40 billion tons per year, we have warmed the planet by 1.2 degrees. We have 8 years of run rate Then we breach 1.5. I'm sorry to say, I know many climate change people are, 1.5 degrees. Forget 1.5. We are blowing through 1.5. What's the problem when we go through these thresholds? What's the problem? The science is very clear. Positive feedback mechanisms on the planet mean our forests, our oceans, and our soils, instead of sequestering carbon, they begin to emit carbon. We hit tipping points where the planet moves into potentially a runaway climate change scenario. We must not do that. And therefore, the time remaining and the scale of doing this is very, very important. So that was my first reaction when I really understood the mechanism. I thought, okay, China's carbon market covers 4 billion tons. That's 10% of the planet's emissions. If that drops by 2.5% a year, that's 100 million tons a year. That's moving the needle. We just need more countries to launch this mechanism, in my view. But my second thought was we not only need a carbon price, the price has to be high enough. As the carbon price rises, it's more of a stimulus to reduce your emissions. It's an inverse relationship, right? If the carbon price is very high, then I have a big incentive to cut my emissions. So my second thought as an investor was maybe I should buy some carbon and invest in this asset. There was no data, though, on these carbon markets around the world. So I hired a PhD student from the LSE program, and we wrote a full academic paper on carbon as a liquid investable asset. Very, very interesting, actually. We looked at 4 main carbon markets, and when we looked at the performance of carbon, really interesting, as climate change is coming onto the radar screen, carbon prices are rising. That's good, right? We all here, if you want to address climate change, what do we want to see? More carbon pricing coverage and a higher price. That's what we want. So buying and holding carbon, we are aligned with the policymakers. It's a good thing to own some carbon. Carbon's been going up about 25% per year over the last 9 years. Quite interesting, outperforming all other assets. The really interesting part is it's not correlated. So when you work in my industry, in the asset management industry, we're all seeking to put investments in our portfolio that really have 2 characteristics. One, a positive expected rate of return. And the second thing, we want to find different investments that are uncorrelated with each other. And carbon, you can see here, is really uncorrelated to the MSCI World, the Global Equity Index. And that's a very powerful statistic in terms of investors seeking something that's diversified. Where are we going for carbon prices? What do we need? To meet the Paris Agreement, if we ask the Bank of England, they say we need $150 per ton. That's what we need, or 130 by the IEA. A simple average is 120, and the price today is about $60 a ton. So it's come up quite a bit, but it needs to double by 2030. So that's kind of the upside, if you will, of the trajectory of where we're going on carbon. Having studied this deeply, I put together a team of carbon market experts, and I launched my second asset management business, which is my current company. We have 2 objectives. We want to do well for our investors, of course, but we also have a direct impact on climate change. 20% of the performance fees that are generated, we use to buy carbon and permanently cancel it. So there's an alignment of interest between our investors and us, and an impact on climate change. And just one slide to tell you what we do. We're targeting an absolute return and an impact. We invest into these carbon markets, so we might be overweight and underweight various markets. We have a dynamic, active investment process. Those markets are very liquid. They're trading $3 to $5 billion every day. And most of the participants are the end users. And that creates opportunities for us to generate additional returns. We've got a fantastic team of people all committed on both climate change, but experts in this asset class. This is all we do is carbon. We don't invest in stocks or bonds. We're only focused, and I believe we're the best in the world at this. We have now just passed a 2-year track record. The fund is up 80% in the 2 years, so it's been a very, very strong period of performance. I'm personally one of the biggest investors in the fund, so that's also good news. And the fund has monthly liquidity, and as I mentioned, 20% of those performance fees are committed to buying and canceling carbon to have that direct climate change impact. Our mission statement is to raise awareness of climate change. Hopefully I've done that with you today, and to provide solutions for capping and lowering emissions. And I'll just close with a quote from Sir David Attenborough, and a picture of a place I love very much was Saint-Tropez in the south of France. And quite an apocalyptic picture, but as Sir David says, we're facing a disaster of global scale. If we don't take action, the collapse of our civilization and the extinction of much of the natural world is on the horizon. And I think that's very true, but there are elements, there's a silver lining, there's hope. But we must really be focused on this very much. Thank you very much.